Welcome everybody to Home Loan Discovery. My name is Jose and I'm a mortgage loan officer in the state of Texas. Today I wanted to talk about how you can figure out your mortgage loan payment. I will show you some of the tools I use on a daily basis to help my clients determine their estimated monthly payment. I have created a spreadsheet here, very simple spreadsheet that will help you determine what your principal and interest payment is going to be. We'll use a website, depending on the property that you're looking at, to find out what the property taxes are going to be, what your homeowner's insurance calculation is looking like, in addition to your private mortgage insurance estimated payment per month will be. We'll add in HOA, which would be homeowners association dues, and then figure out that monthly payment. But let's go ahead and get started with one example. I'm going to pull up several websites here that you're going to be very familiar with or very popular out there right now. Let's just begin by doing an example. Say you are in the process of looking for a home to purchase. And so one of a big website that is out there is redfin.com. And so let's just go ahead and take a look at Redfin. And in this particular case, there's a lot of homes out in the San Antonio area. It's a very up and coming city, one of the largest cities in the state of Texas, and growing tremendously on a year to year basis. And so there's a lot of activity, especially right now during purchase season, in regards to the purchase and the homes being sold right now. So let's go ahead and take a look. Perhaps let's go ahead and look at um, the northern part of San Antonio, and let's just take a look at. We'll just pick whatever property here. I set the range from 125,000 to 200,000. Just a regular home, single family home, and you can filter them out through here. So I just picked house. Drop down menus here, 125 minimum to up to 200,000. So let's just pick. How about we'll just pick this home right here, 175,000. Let's go ahead and take a look and open this up. So um, 5035 Casa Oro Street, 174,900, 4 bed, 2 bath. Okay, so let's go ahead and start plugging in some numbers into this spreadsheet to figure out what this monthly payment is going to be. So just for the purposes of round numbers, let's just say 175,000 is the purchase price. Okay, so let's go to the spreadsheet here. Let's go ahead and type in. So if we didn't have anything there, let's go ahead and just type in the purchase price here. So 175,000. Let's assume that you're going to make on a conventional mortgage loan a 5% down payment off of your purchase price, right? 5% would be approximately 8,750. So what you're left with is that loan amount, the amount that you are going to finance, which is 166,250. And so the calculation is going to be off of this amount that you're financing, not the purchase price, but the loan amount after the down payment. So 166,250. We're going to do it at a 30-year mortgage, which would be equivalent to 360 months. The going interest rate out there right now, I mean, it's late June 2018. So right now the rates have been going up. Lowest rate that I've seen, with no discount points depending on your credit score and loan to value is approximately 4.75%. Loan to value is just the uh, the loan amount here, right? I'm sorry, we have the uh, sorry. So the loan to value I have here is your loan amount divided by your purchase price. It's going to give you 95% out of 100. So the other 5% comes from you, which would be your down payment of 8750. So if we, again, if we plug in 175,000, that's how much that home is being sold for. Your P&I, or otherwise known as principal and interest, would be $867.24. The property taxes, I'm not really sure, right, what they are. So you can do a couple of things to figure out what those property taxes are going to be. So you can just scroll through the listing on Redfin, and it has that total tax amount right here, $4,548.95. One thing that we use at work on a day-to-day basis is the tax assessor's office, and in this case, San Antonio, their county is Bexar County. So simply do a Google search for Bexar County Assessor's Department, or Assessor's Division, I'm sorry, and then you type in the address of the property. So it's going to be 5035 Casa Oro. Just hit search for 2018. You don't have to do anything in the text here. Alright, so this person owns it. Let's click on view details on the side and click here expand all, and we can start scrolling. Okay, so this is going to give you a lot of details about the property in itself. So we have the legal description right here. Okay, it says it's a single family home. We got the address correct, 5035 Casa Oro Street. Okay, just kind of keep looking down here. So according to the 2018 tax assessor's office, the market value of this property is $179,460. So that's the home site value, the actual structure $162,990, and then the land valued at $17,370. They come up with $179,460. So it's actually being sold for under the value for 2018. So that's always good. Hopefully whenever they do an appraisal, that comes back as that or higher. But as you can see here, the property taxes here without exemptions is $4791.66. Okay, what did it say here when we found it? $45.95, but that was 2017. So taxes have gone up to $47.91. So let's go ahead and figure out that per month. We use our trusty little calculator here. 4791.66 divided by 12. That's $399.31. So $399.31. $399.31. We'll plug that in under taxes. Homeowners insurance right here, I don't use a website, but we typically just, what we do is we just take a 0.5% off of the purchase price to figure a 12-month policy. Okay, so that would be, if the purchase price is $175, 0.5% would equal a policy premium per year of $875 divided by 12. That's $72.92. So $72.92 is right here already plugged in because the spreadsheet already has that formula in there for you. And then we have to figure out what private mortgage insurance is going to be. And so what private mortgage insurance is, simply put, if you as the buyer are not putting a down payment of 20% off of your purchase price, the lender is going to ask for you, or they're going to require for you to pay what is called private mortgage insurance. And what that is it's insurance that protects the lender in case of a borrower defaulting on the loan and not paying it, right? For conventional financing, it's not going to be for the life of the loan, but this monthly amount that you're paying does not go towards paying down this loan amount. So if you want to get into a home and you don't have 20% down, you're going to expect to pay private mortgage insurance on a conventional loan. Okay, so one website where we can go and figure out what that private mortgage insurance per month is MGIC. Okay, so go to Google, type in PMI, or MGIC, and you'll get this website, and it'll ask you to enter some values in here. So let's go ahead and start. Our purchase price was 175. Okay, loan to value over here, 95%. Let's assume your credit score is 740. Okay, on a 30-year fixed mortgage, your loan amount is 166,250, right? 166,250. So let's go back. It says here annual home appreciation rate. So what they're trying to calculate here, or why they're getting this information, is they're trying to calculate when they expect your private mortgage insurance to go away. Because if you don't have 20% down payment, it goes away once you have 80% equity position in the property. Okay. So let's go ahead. Monthly mortgage insurance, right? We'll do monthly MI, no split, no single, none of this stuff. It's just monthly MI, standard right there. Let's just say your rate is 4.75 on this loan. And scroll down. Let's click on calculate. Okay. And so right here, it'll tell us more information about, the calculation of this monthly mortgage insurance. And really what we're after is this right here, $72 a month. So let's go back and type in for PMI, $72 a month. So the last thing on here, homeowners association dues, otherwise known as HOA. A lot of properties nowadays do have homeowners association dues. Redfin is pretty good about giving you this information if it does have it. So let's go ahead and take a look if it does or does not. No, let's do a search. HOA, no. Homeowners, no. I don't see anything there. You may want to talk to your realtor, right, if you have one, just to double check, but more than likely, all this HOA dues and fees are going to be reflected on this listing right here. So I don't see any homeowners association dues anywhere on the listing. So we can just go back to our spreadsheet, okay, and then, just leave it at 0 right there. All right. So let's go ahead and start from the top. What I'm reflecting here is a conventional loan. Conventional fixed rate. And the term is 360 months, otherwise it's just a 30-year loan. This is going to get you the least payment possible per month. Interest rate depends on your credit score and loan to value at 4.75%. You're putting 5% down, so making a loan to value of 95%. Your purchase price, what we saw, was $175,000. We got that information off of Redfin. The down payment, again, this will calculate it automatically for you. So if this is 0, okay, as soon as you type in 175,000 or whatever the purchase price is, it's going to calculate the other fields below for you as well. It's going to calculate the down payment, the loan amount, the principal and interest, and the homeowner's insurance for you automatically. All right, so 175,000, press enter, and it'll pre-fill. 5% would be 8,750 as a down payment. We're not talking about closing costs, but there are closing costs associated with doing a loan, so keep that in mind. This is just showing you purchase price, down payment, and then the loan amount, which is your purchase price minus that down payment. So 166,250 is calculated or amortized for 30 years at 4.75 fixed rate. Okay, and so that gives us a principal and interest payment of 867.24, right? A lot of those calculators online, they just give you this information. They just give you P&I, or principal and interest. And you say $867, I can definitely afford 867. Let's do that. Okay, but then you forget about the additional um, requirements for a home, right? So you have to pay property taxes. Depending on your lender and how much you're putting down, they may allow you to pay both your property taxes and homeowners insurance separately, otherwise known as no escrow or waiving escrow. But if typically you're only putting a 5% down payment, the lender is going to require you to include these taxes and insurance per month within your payment. So that's why I wanted to show you this. It's not only 867.24, it's your property taxes. And again, how we figured the property taxes was that we figured out the city that that you were buying in, figure out what county it is. Okay, we figured that it was in Bexar County for San Antonio, and we looked up Bexar County CAD, CAD. Once you do that, you could do a property search. Okay, type in the property in here, tax year depending on what year you want to use, but obviously we'll use 2018 because we're in this year. Click search, and then that property will pop up. Click on view details on the side, expand all, and then you'll see all the details. You want to scroll down, and most of them look the same as far as formatting wise, but you want to go down and look at the property taxes per year. This is the figure per year. So divide that by 12 and then plug it into your spreadsheet here. So that would equate to about $399.31. The homeowner's insurance, we simply have a calculation in the background of a 0.5% off of the purchase price of $175, which would equate to about $73 monthly. For the private mortgage insurance, because we're not putting 20% down, we have to pay private mortgage insurance to protect that lender, right? What we did was we went to MGIC, which is a private mortgage insurance company online. We typed in some fairly easy details on here, some information you already have on that spreadsheet. Purchase price, you can type in the down payment or that LTV of 95%. Figure out what your credit score is. We're doing a 30-year fixed loan. The loan amount will calculate by itself. It's a purchase. I think it pre-fills to 3% right here, so leave it at that. When does borrower plan to sell or refinance? I just put 7 years. Typically, a first-time home buyer is in their home anywhere from 5 to 7 years. And then down here, just click on monthly MI, the first one here. Type in what your home, so what that mortgage rate is going to be, 4.75. You don't do anything here. And then scroll down a little bit and hit calculate. Once you click calculate, it'll populate this information right here for you. This information right here, really what we're looking at is the monthly MI payment or monthly mortgage insurance payment of $72 monthly. So now that we have that information, now we can go back to the spreadsheet, type at $72 in here. We looked at Redfin and there was no HOA anywhere in here, right? So we looked and there was no HOA there. Again, you may want to talk to your agent to see if maybe they know if there is a mandatory homeowners association, then you have to pay monthly, but in this case that property was 0. So now our estimated monthly payment on a home of $175 with a 5% down on 30 years would be approximately $1,411 per month. That's including principal and interest, property taxes, homeowners insurance, private mortgage insurance, and no HOA. Okay, but all these figures, are going to be dependent on your credit score, loan to value, that particular property. But at least this spreadsheet gives you an idea of how to calculate when you're out searching properties. Okay, I really hope this was helpful for you. I'll be making more videos more often, talking about more mortgage details, mortgage loans, things like debts to income ratio, calculations in regards to that and other mortgage related topics. So be on the lookout for more videos. Like and share the video. Please comment below if something that was in the video was unclear to you. So please let me know if you have any other questions, if you're curious about certain things, anything in regards to a mortgage loan. I'll see how I can help you out. You can leave your comment below, and hopefully like I said, I can be making more and more videos more often. So please stay tuned and again, like the video, share, comment, please, and we'll see you next time.